What's up, guys? Welcome to an edition of Market Marauders, beating the market one trade at a time. Market Marauders is an investment channel, helps you find better deals in the market for options, penny stocks, and things of that nature, just different sectors in the market. It's kind of an overall investing channel for retail traders or professional traders. But for me, I'm a retail trader, just basically showing you from a retail trader perspective on what deals are out there in the market and showing you there's money that can actually be made out there. If that's something that you like, make sure you hit that subscribe button down below and hit that notification. I make these videos every week. Also in the description down below, if you want to donate to the channel, there's a link down there. And also, there's a link for some books that I think is good for every investor to read. I think reading is always paramount. If you don't like reading, then you don't like investing, in my opinion, because reading is like where you get all your information for investing. So, with that being said, let me jump into it. The way I run these analysis is for the stock. I don't just look at charts. I like to go and look at the chart as well as give background information on what's going on because I believe, just looking at charts is not real investing. I think it's just guessing. You need some background information when it comes to actually investing in the stock market, and the more information that you know, the better you are in the long run. And just reading charts, to me, doesn't really give you any information. You're just kind of just betting and gambling. And as a retail trader, you want to make as much money as possible. So the most information that you have, the better. But this is just showing you all where to start or how to begin your journey into trading. So, going down here, we have first one for my top 3 option picks for the week. We have Zoom Video Communications, which ticker sign ZM. ZM's been doing pretty good. It's been on a pretty long run since February, with everybody being shut in or at home. It's been pretty good since their volume has been up, as well as people been using their product a lot more. Their moving average 50 is $1.08. I mean 108 and 12 cents. Their moving average 200 is 86 cents, $86.59. Sorry about that, guys. And they're they ended the week at $128.20. So you know this is on Sunday, so depending on when you watch this video, it's definitely going to change, and the price will be different. So just bear that in mind. This was filmed on Sunday, and when the market opens, the price will be different. Now, jump into some background information. This is on their website. So press releases is what I go off of because it's strictly from the company. You can read other articles that are by like different companies like Wall Street Journal or stuff like that. But this is directly from the company's website, so it's the source of majority of the information that I believe you should be reading. It's all public information. I don't have a special pass to get in this information. Just Google Zoom Media press releases, and this is what pops up. This is one of the links on there. This article came out on the 4th. This is basically their reports for fourth quarter and fiscal year 2020 financial results. So the fourth quarter total revenue was 88.3 million, which is up 78% year over year. Full fiscal revenue was 622.7 million, which is up 88% year over year. Fourth quarter GAAP income operations is 10.6 million, up 92% year over year. Income operations 12.7 million, up 106% year over year. Fourth quarter non-GAAP income operations was 38.4 million, up 292% year over year. Fourth quarter operating cash flow 36.6 million, up 129%. Year over year. And full fiscal operating cash flow is 151.9 million, which is up 196% year over year. So basically, all of their metrics have gone up. They definitely have increased the amount of money that they have been making, and this is just due to the fact of what's going on. You know, and I don't think that actually reflects on what's going on with the market, with the price. If we could see the price kind of went down, had a drop off, but I think that's going to bounce back up, in my opinion, just because their financials are really good. The financials are kind of what drive the company, in my opinion. So, with good financials and more people using their products, I think it's going to continue to go up from here, and this just basically shows that their financials were really good. So I think their next quarter is going to be equally good as well, just based on the fact that people are still quarantined. They're still sheltering in place and things of that nature, and conferences still have to be made. And so, I think that's going to continue to grow this company in the long term. So I think they have like another quarter of continual growth from this whole pandemic situation. That being said, while they're in a lull right now where they had dropped down, um, I think it's a good time, to jump into a call. Now, for you all who are new to options investing, this is Robinhood. I use Robinhood trading platform. I'm not endorsed by Robinhood at all. I do not have, any affiliation with Robinhood. Is like, trying to get people to use Robinhood. It's just what I use trading platform wise. There are other ones out there, Tastyworks, Webull. I just don't use those because Robinhood is the one that I've used for the longest. So it's the one that I continue to use, even after they had their whole fallout with that one. There was one crazy or a couple of crazy days where their app was just down. I'm still using them. Still works for me. I like the way that their platform is laid out. One day I may switch over, but I haven't so far. So this is just going to be a review of options based off Robinhood. But I think these options, are kind of universal. So if you just apply them to whatever platform that you are currently using. That being said, if you're new to options overall, I personally do buy calls and buy puts. Um, so a call is basically mean you believe that the price is going to go up above a certain price. That price will be your strike price. Your strike price basically is the price in which you think the stock is going to go up to and above. So if I say my strike price is $170, I believe that at $27 that the strike price is going to go above $175 by this expiration date, which is May 15th. Um, so, that's basically options in a nutshell. Puts, buying puts basically means you believe that the stock's going to go down below a certain price, being that strike price. So if you had a put, that means that you will believe, if this was your put, you'll believe that it will go down below $175 at that certain expiration date. Now, every contract that you buy, because options are contracts, is 100 shares. So if you buy one contract, it's the equivalent of 100 shares. So that being said, when you buy this price, you don't pay $3.53 for this contract. This contract is a contract that buy 100 shares at $353 a share. So what I mean, $3.53 a share. So what you'll pay is $353 for one contract. So just bear that in mind if you're getting the app and you're starting to do options, or if you already have the app and you want to start doing options. Just bear in mind that this price is $250. This price is $295. They're not $2.50. So, you know, that being said, I think a good strike price for Zoom Media is going to be between $165 and not $190. So this interval right here, I think May 15th is a good expiration date. It's a little off in the future, and then we'll have more updates about the whole quarantine situation. Um, you know, there'll be more updates, as far as how that's gonna work, and I think that's gonna also affect Zoom's overall earnings, because if more people are going to work in May, then there'll be less people using Zoom media. So it'll be a good resistance date wise, in my opinion, to see the actual fortitude of Zoom media. So if you buy these strike prices between 165 and 190 strike price, you're going to be paying between $575 to $250 per contract. So it may be a little pricey um, for some and not pricey for others. And that's just all part of risk management. Risk management is, relative. So depending on your current financial situation, $575 may be a lot of money for you, or it may not be a lot of money for you. $250 may be a lot of money for you, or it may not be a lot of money for you. As a retail trader, risk management is something that's very important, and also, something that's overlooked as well. So risk management just basically means, what are you willing to pay per particular, even for single stocks, what are you willing to pay per single share or per option trade, or what amount of money do you are you comfortable with trading? Now, some people are saying, save all your money, get $10,000 or so, and then begin trading. I don't think you need that much money. This basically shows you don't need that much money. Um, you can start with $250 and then begin trading. But the most important part about it for retail traders is to just learn. So learn with your own money, because that's what you're trading as a retail trader. You're trading your own money. Um, and some people are like, why don't you just get a paper trade account? Because it's not your own money. Um, you know, Paper trade accounts are cool, but it's not your own money. It's completely different. Trading paper accounts, or just, accounts that are like play accounts, is not the same as spending your own money. And until you're putting skin in the game, and you're spending your own money as a retail trader, and not just going and doing these paper accounts, I don't think you're ever going to truly know what it is investing. Because losing $200 or losing $500 of paper trade account money is way different in comparison to losing $500 of your own money. So until you're wholly invested in beginning trading and learning trading strategies by using your own money, then it's different. You're not going to really know what it is to truly be retail investing, um, or investing or trading in general, because the emotion that you have is not going to be the same. So with that being said, moving on to my number two pick for options, I'm going to say Microsoft, ticker sign MSFT. Their moving average 50 is $164.17. Moving average 200 is $148.36. And they ended the week at $153.83. So if we go to their press release, one of their press releases from the website, this was released on March the 20th. So basically shows that they're trying to decode the immune system response to the pandemic. So they actually have a plan, and their plan is through blood samples, immunosequencing, machine learning, and research acceleration. So they're kind of taking a scientific approach to trying to understand how uh, the immune system reacts to the overall virus itself. So, I think that's a pretty cool approach to it. And I think it could yield a lot of profitable information, information about, how the body works, and, help further try to find a cure, for this pandemic. So, that being said, that's why I picked them. I know, well, if you've watched or followed in the news, Bill Gates is really on the front lines as far as trying to find, a vaccine for this. Kind of warned people a while ago about what was going to happen. But, now he's just trying to help. Find a solution basically, and he has a lot of resources that can help do that. Um, but I think they're on the right path as far as the company Microsoft is concerned on trying to help discover vaccines and ways to help people in this time. Also, one thing I don't have on here is Microsoft Teams. Not only are they helping in the pandemic, but Microsoft Teams being implemented into a lot of different workplaces that kind of rivals Zoom media. So to me, it's kind of like either you have one or the other. You either have Zoom or you have Microsoft Teams. And I think Microsoft Teams, because I've personally used it, I think is a really good tool. I can't really speak on Zoom. I haven't used Zoom that much, but I have interfaced with Microsoft Teams, and I think it's a pretty good software. It's pretty cool, intuitive. It's easy to understand. It's easy to use. So I think they're also going to be profitable in that sense too. So they kind of have two dual profitabilities for Microsoft. With help trying to decode people's immune response to the pandemic, as well as helping people to be more integrated as far as staying at home and trying to have meetings and remote work situations. That being said, I think a call probably the best option, even though they're down, at the current moment. I think a call is still pretty good. I think a good strike price for Microsoft would be between 200 and 250. So if you look between 200 and 250, you're going to be paying between $104 and $10. So all those people who are like, you need to save $5,000, you need $1,000 to save to start begin investing. This contract is $10. The next contract's $13. Next contract $17. It's not that much money. So if you want to begin investing, you can kind of start off with what you have and put it down towards your first call option or your first option in general. Um, just download the app, sign up for options, and then you're good to go. The main part is you learn from what happened, if it was good or if it was a bad call, should have been a put, how did the information that I read correlate to the stock price actually moving, things of that nature. Learning is the best part about actually investing. It's the most important part, in my opinion. I think the more you learn, the better you become as a retail trader, or just a trader in general. Um, so yeah, that's why I picked Microsoft as my number two option for the week. I definitely see a lot of growth potential with them. Going to our number three pick, I have ticker sign NVAX. That's Novavax Incorporated. Their moving average 50 is $9.81. Moving average 200 is $6.18, and they ended the week at $15.61. Now, I have gone over Novavax in the past. And, I kind of called them as going to be a pretty good company that breaks out. So, I have a previous video on that. And, I'm gonna reiterate this fact that I think Novavax is a pretty good company. It's gonna continue to grow. So I think that they have a lot of good things going on with them, and I think they're gonna continue to grow basically. So going into the press release, we have their quarter results. So they have a NanoFlu top of the line data from phase 3 clinical trial expected by the end of the month. They have actually gotten data from their NanoFlu uh, phase 3 clinical trial. I saw it. It's on the next press release. But if you guys want to Google that, Novavax, and you want to go and read that, just Google the company's name, Google press release, and it'll be in the investors tab, this investor section for the company. So I was just trying to get a high level of what's going on. It says Novavax was awarded CEPI funding for the pandemic to try to find a vaccine. And then beginning their phase one in the late spring of 2020 to help the pandemic situation. So going to their pandemic program, basically, it says they got an initial funding of $4 million to support their effort to develop a vaccine. And that's pretty huge, considering the company and what they're doing. They're really big. Uh, they have their phase 3 clinical trial of the nano flu Novavax. So I think the company's on the right path. I think the fact that they're getting funding um, is a good thing, and people don't just give money to anyone. Uh, especially sums of that amount, $4 million. So there has to be a reason why the company is getting that amount of money. So I think it's pretty good, and I think the company is going to continue to grow. That being said, jumping into what I think investment wise, a retail trader will be a good option. I think a call will probably be the best option. May 15th expiration is probably a good interval. And I think, between the price of $17 and $25, which is on this interval right here, is probably a good, barrier for entry. Now, if you go in here, you're going to see you're going to pay between $153 and $35 for that particular call, but I think it's going to yield profitable. I mean, if you see on here, there's already a $3,400% change. So, it's already showing that it's going to be profitable. Just the fact that it jumped up to $15.40, shows you that it's going to be profitable as well. But just bear in mind that this value is not stagnant. This value is stagnant for options traders. This is the stagnant value. This value changes based on the share price. So the closer it gets to it, that's basically going to be what is going to drive this amount. Um, Also, these options up here above this line, these are considered out of the money options, and down below these are considered in the money options. So an out of the money option basically means that it hasn't gotten to this price yet. In the money option means it's gotten to this price and it's gone above it. So if you see below this line, there's $15. It's at $15.40. Hence why this is $270. This is $205. $16. It hasn't gotten to this price yet, so hence why you see it's above this line. Now, when the share price changes, this will change, and if it becomes in the money, it's going to be more profitable than what it currently is now. So just bear that in mind that you're going to be looking at the strike price. The strike price is not going to change, but this price definitely will change. And you want to get in at a good price to where it'll become in the money, and it goes and becomes profitable. Now, me personally, I don't buy in the money options. I just buy out of the money options. But different strokes, different folks. If you want to buy out of the money, in the money options only, or you buy out of the money options only, that's your personal preference. I'm not going to tell you how to trade. It's just different trading styles for different people. Now, for you all who stayed, I have a bonus one. So this is my number 4 on my bonus one. I had it in a previous video, but I think they're still going to be doing really good, and it basically shows their profitability since I made that video. So I made a previous video. It's called recession-proof stocks. Uh, or stocks in 2020 recession that are going to be yield profitable. So you can go back and watch that video. I'll link it just above for you all to go watch that, because there's some more on there on that list. But click on that link and then you'll go, it'll go and show you those different stocks. And this was one of the ones that's on that list. So Lakeland Industries, I think it's going to be really profitable just for the fact that, what they make. They make a lot of hazardous gear, hazmat gear that I think a lot of people use. And their moving average 50 is $15.15. Moving average 200 is $11.99, and they ended the week at $17.48. So they're above their moving average 50 and above their moving average 200, which is a good sign for their metric overall. Now going into some of the things that they sell industrial grade uh, biosuits. So they have these biosuits. If you watch any news, you'll see people have these suits on all the time. This is one of the main things that they're wearing, to try to combat the pandemic, as well as, they have other, cleaning suits, um, different suits for protection. These are things that, I think are going to be bought up in mass amounts. Um, I think people are going to continue to buy more and more of these as time goes on, just to shield themselves. And this is another form of PPE that I don't think is talked about that often, are suits like these, because people can use them. People use these suits all the time for chemical industry, but I think they can definitely be applied as far as medical contamination is concerned. So, you know, I see people buying more of these suits to help stopping the spread of the pandemic. So, in the future, I definitely see, this company making more and more money. That being said, I think a call is the best option for Lakeland Industries. I'll say between $20 to $30 is a good price barrier entry. They're really close to $20, so I think they're going to continue to go up from there. $30 I don't think is unreasonable for to see the company go up by May. May 15th is actually when I have this expiration. I don't think it's too much to say to have the stock go between $20 and $30 by that time period. Uh, that being said, going into it, you're going to be paying between $83 and $238 if you make that call in Robinhood. Now, if you like the video, give it a thumbs up, hit that subscribe button down below, comment, like, share. And good luck to you all trading out there. There's still money to be made out there in the market. Don't let anybody tell you that as a retail trader you can't make any money, because there's money out there to be made as a retail trader. Just think logically about what you're doing. Try to find good quality picks. Do your due diligence. Can't say it enough. Do your due diligence. Um, and try to find those deals out there. They're out there, and I hope this video helped. Uh, so, good luck to you all trading out there. I'll see you guys next time. Peace.